and welcome to 3.0 TV. I am Vishakha Thakur. Bitcoin price remained range-bound on Friday despite benefiting from a weaker dollar after some relatively softer consumer inflation readings for April, although the token remained comfortably range-bound as sentiment towards crypto remained subdued. The world's biggest crypto had pushed as high as $66,700 before losing momentum and settled around $65,200, down by 1.43% in the last 24 hours. Ether changed hands around $2,940, down by 2.7% in the similar time frame. Bitcoin rebounded on Wednesday after sinking as low as $60,000 earlier this week. Well, the rebound was fueled largely by a slide in the dollar, which hit one-month lows after some softer consumer price index readings for April. CPI grew at a slower-than-expected pace, while core CPI eased as expected. The readings, which were accompanied by weaker-than-expected retail sales data, pushed up some hopes that inflation will ease in the coming months and give Federal Reserve more confidence to begin trimming interest rates. But inflation still remained well above the central bank's annual 2% target range. A slew of Fed officials also warned in recent weeks that the bank will need much more confidence to begin trimming rates. Now, this notion limited any major gains in Bitcoin, keeping the token trading comfortably within a $60,000 to $70,000 trading range established over the past 2 months. Increased risk appetite, which was reflected in Wall Street hitting record highs, also did not spill over into crypto. The prospect of regulatory headwinds bode poorly for crypto markets, especially as recent reports suggested that SEC was mobilizing more regulatory action against the sector. The global crypto market cap is $2.36 trillion, a 1.14% decrease over the last day. The total crypto market volume over the last 24 hours is $78.21 billion, which makes an 18.13% decrease. The total volume in DeFi is currently $7.2 billion, 9.21% of total crypto market 24-hour volume. The volume of all stablecoins is now $73.02 billion, which is 93.37% of the total crypto market 24-hour volume. Bitcoin's dominance is currently 54.57%, an increase of 0.05% over the day. The Chicago Mercantile Exchange, world's largest futures Bitcoin trading platform, is set to introduce spot BTC trading in response to increasing demand from Wall Street investors. CME is in discussions with crypto traders to establish a regulated marketplace for spot Bitcoin trading, expected to operate through EBS, a Swiss currency trading platform known for its strict regulations on crypto asset trading. The introduction of spot BTC trading on CME would enable traders to engage in basis trades, a strategy that aims to profit from the small price discrepancies between futures contracts and the underlying spot BTC. This development comes after the US SEC approval of spot Bitcoin ETFs in Jan, signaling the growing acceptance and integration of digital assets into traditional financial markets. As of March 31st, 937 professional firms were invested in US spot ETFs compared to just 95 professional firms invested in gold ETFs during this first quarter. CME's entry into spot Bitcoin trading could present significant competition for Binance, the largest crypto exchange by trading volume, which currently faces regulatory scrutiny worldwide. Over 600 professional investment firms have reported significant investments in spot Bitcoin exchange-traded funds in their 13F filings with the US SEC. According to the filing data on May 9, professional investment firms own $3.5 billion worth of Bitcoin ETFs. Morgan Stanley, JP Morgan, Wells Fargo, UBS, BNP Paribas, Royal Bank of Canada, and hedge funds like Millennium Management and Schonfeld Strategic Advisors were among the top investors. Millennium is the largest BTC ETF investor with $1.9 billion invested. Now, other top investors include BlackRock's iShares Bitcoin Trust, Fidelity's Wise Origin Bitcoin Fund, Grayscale Bitcoin Trust, ARK 21 Shares Bitcoin ETF, and Bitwise Bitcoin ETF. Schonfeld Strategic Advisors, a hedge fund with $13 billion in assets under management, was the second largest spot BTC ETF investor with $248 million investment in BlackRock's ETF and $231.8 million investment in Fidelity's fund, totaling $479 million. Now, other top investors include Bow Bay Fund Management, Pine Ridge Advisors, Morgan Stanley, Aristia Capital, Graham Capital Management. Despite the recent slump in inflows, hundreds of financial institutions have revealed billions of dollars invested in spot BTC ETFs. Blockchain security researchers from Binance have developed an algorithm to detect poisoned crypto addresses on the BNB Smart Chain and Ethereum networks. Address poisoning is a scamming method where the threat actor sends small amounts of crypto from an address that resembles a victim's address, misleading the user to use the fake address for transactions. Now, this attack preys on users' carelessness as they may overlook subtle differences in addresses. A recent incident of address poisoning led to the loss of $71 million worth of wrapped Bitcoin, raising concerns about the prevalence and scale of damage caused by such methods. Binance's algorithm identifies spoofed addresses by detecting suspicious transfers, pairing them with potential victim addresses and time-stamping malicious transactions. The spoofed addresses are registered in the database of Web3 security firm Hashdit, Binance's security partner, to protect the wider crypto industry from these scams. Address poisoning scams are difficult to detect due to traders only verifying the first and last digit of wallets. 42 alphanumeric characters, and most protocols only display these digits. The trading volume of XRP cryptocurrency has risen by 23% in the last 24 hours, reaching $1.27 billion according to CoinMarketCap. This surge coincides with a 3.7% increase in XRP's price, peaking at $0.5196. However, the price is currently experiencing a minor correction of 0.6%. The price fluctuations are part of a broader surge in volatility across crypto market. CoinCheck, a prominent crypto exchange in Japan, has seen a mysterious transfer of 100 million XRP tokens, amounting to approximately $51.6 million from its platform. The withdrawal was directed to an address known as R99Q, which has been active since February. CoinCheck, regulated by FSA and audited by the Japan Blockchain Association, is known for its substantial liquidity, $100 million trading volume, and traffic, making it a key player in the Asian region. The transfer raises questions about the exchange's internal operations and its potential implications for market dynamics. India's Securities and Exchange Board of India has recommended multiple regulators to oversee crypto trade nationwide, contrasting the Reserve Bank of India's tightened grip on cryptocurrencies since 2017. The decision has gained traction among Indian crypto market participants as the RBI has had a firm grip on cryptocurrencies since 2017, prohibiting banks and other regulated institutions from facilitating the trade of virtual digital assets. Ashish Singhal, co-founder of CoinSwitch, expressed optimism about the decision, stating that an enabling regulatory environment has paved the way for greater consumer adoption in other sectors. India's tightened grip on crypto began in 2013 and was halted in 2017. Recent developments have brought a slight ray of hope for Indian crypto market participants. Arbitrum addresses reached an all-time high in May due to new users using its DeFi and NFT offers. The network is now among top Layer 2 solutions for Ethereum, offering faster and clearer smart contracts for messages and activities between Layer 1 and Layer 2 addresses. The growth of Arbitrum is attributed to developers using it as a basis for their decentralized apps. Gas fees optimization has fallen since the end of March while transaction counts expanded. Arbitrum already carries leading multi-chain apps including Uniswap, SushiSwap, OKX, DEX, TraderJoe, and Aave. Web3 gaming is also experiencing an active period, choosing Arbitrum's tech for new competitive experiences. Well, the Arbitrum DAO is voting to add more projects as orbit chains with opportunities to connect to other L1 or L2 networks. Bitcoin DeFi is spreading to Arbitrum, with platforms competing to integrate Bitcoin into decentralized finance. Shiba Swap, a decentralized exchange for the Shiba Inu community, is now live on the Shibarium blockchain, allowing users to introduce new liquidity pools and enhance multi-chain operations. This move signifies a significant milestone for the Shiba Nation as it brings sophistication to multi-chain operations on Shibarium and Ethereum. The Shibarium integration ensures ShibaSwap users are aware of the protocol's scalability merits, potentially increase the scarcity and value of SHIB, leading to a multi-increased strength and growth of the Shiba Inu ecosystem. The platform's new interface has been upgraded to improve user experience and reduce volatility in the DeFi network. Future platform upgrades include advanced interfaces for personal information pages and money transaction adjustable price ranges for liquidity, efficiency, and simplified portfolio management. The Shiba Inu team's dedication to continuous advancement and innovation is evident in the upcoming new layer. Stellar is set to upgrade its network with Protocol 21, which introduces new features and improvements to enhance network efficiency and reduce fees. The upgrade, which is now live on the testnet, is part of Stellar's core advancement proposals, which aim to keep the Stellar network accessible and cost-effective for all users. Previous upgrades to Protocol 20 have set a positive precedent for the upcoming upgrade to Protocol 21. On Feb 20, 2024, validators voted to upgrade to Protocol 20, which brought Soroban smart contracts to Stellar's public network. Since then, developers worldwide have successfully deployed smart contracts to the Stellar mainnet, setting a positive precedent for the upcoming upgrade to Protocol 21. With Protocol 21 now live on the testnet, the focus shifts to preparing for its deployment on the mainnet, requiring careful coordination and testing to ensure a smooth transition. Key dates following the testnet upgrade include May 30 for stable release of Stellar Core, Horizon RPC June 11 for the testnet reset, and June 18 for the vote to upgrade the mainnet to Protocol 21. Metalco, a free-to-play MMO combat game, has partnered with Portal, a universal gaming ecosystem, to consolidate all Web3 games, digital assets, and user accounts into a single, easily accessible location. The partnership is part of Metalco's mission to build a player-driven, interconnected ecosystem of gaming token utility. Studio 369, the game development company behind the blockchain-powered PvP shooter, raised nearly $19 million for Metalco in March this year. Raising $5 million from various investors, the funds will be used for continued development and upcoming features, including a dynamic mission system that uses AI to generate unique assignments, objectives, and tasks. Metalco also features a scanning system that allows players to obtain blueprints from fallen enemies, craft new weapons and vehicles, and convert them to Web3 assets for trading. The partnership aims to break down onboarding barriers and support growth in the Web3 gaming industry. That's all in the bulletin today. This is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.3versetv.io or scan the QR code.